So the former CIO at Goldman Sachs has given his prediction for Tesla's revenue over the next 6 years. Frankly, well, I'm not sure exactly what to say, but the numbers are absolutely staggering. Hello, my friends. Welcome to the channel. I'm the Electric Viking. Great to see you. Hope you've had an amazing day. Welcome to all the new subscribers and welcome back, everyone else. Gary Black, who is the founder of the Future Fund Active Exchange Traded Fund and the former CIO of Goldman Sachs, plus a lot of other things that he's done over his career, including growing one fund from $2 billion in 2004 to $29 billion in 2008. Needless to say, I'll put a link in the description below, but this guy knows what he's talking about. Gary tweeted that there are some catalysts to the reasons for his predictions. So before I tell you the predictions, let's have a look at the catalysts. He says, Shanghai will fully reopen in May. I don't think that's true, but I think it will probably fully reopen more than likely in June. So close enough. Number 2, stock split announced in June. Number 3, Twitter deal risk will lift in July. Number 4, Tesla's AGM and their AI day on the 2nd of August. Number 5, Biden's $8,000 EV credit will come out in August of this year. Number 6, new gigafactories, UK and East United States in the 4th quarter of this year. I don't know where he's getting this UK gigafactory stuff from, and I've heard some rumors, but I think that's extremely unlikely. I think Tesla's going to focus on China. Just a tip, why? That's where they make their money, making cars in China. So does Volkswagen, by the way. Anyway, number 7, full self-driving beta release in the 4th quarter. I'm not sure what that means. Maybe know something I don't know. Number 8, Cybertruck launch in 2023. And number 9, robo-taxis coming out in 2024. Now that does seem possible. That's still 2 years away. Now Gary predicts incredible free cash flow for Tesla. He calls them a money printing machine. Excluding energy, full self-driving and Tesla bot, he says this is what Tesla's revenue will be. So he's just assuming that Tesla won't necessarily make any money from those things, which they may, and going with the base case scenario here, right? 2022. 10 billion does seem possible considering Tesla's revenue and cash generated in the 1st quarter of this year. 2023, 20 billion. 2024, 32 billion. We're talking US dollars, by the way. 2025, 50 billion. 2026, $68 billion. Now he says Elon sold 25 million shares plus employees' stock options that greatly increase the supply of Tesla stock during this current bear market. Reasonably, Tesla buys back its cheap stocks. So he wants Tesla to buy back its stock. Now this would be a cumulative total in profits from 2022 to 2026 of 180 billion US dollars. That is a boatload of money. That is a mountain of money. $180 billion. I don't know if this is possible, but I know Gary is not someone that doesn't do his homework. He's definitely done the research when it comes to these revenue totals. In fact, you can see here his predictions in non-GAAP, CapEx, and other operating expenses. He's done his research here. You can see all the numbers. Have a look at them for yourself, because they're certainly worth looking at. Now, Gary claims that Q2 is irrelevant for Tesla. He says investors will look past Q2 to the 2nd half of this year due to Shanghai's COVID lockdowns. Q2 EPS estimates have already been right-sized at $2.23, down 33% versus $3.22 in the 1st quarter. Full year 2022 EPS estimates are still $12 US at plus 14% over the past month. Now, everybody thinks that Q2 is going to be a disaster for Tesla. It might not be the disaster we think it's going to be. Yes, it will be down. But I'm not so sure it's going to be as bad as what analysts are predicting. Now, Tesla generated a free cash flow of $5 billion in 2021. And Tesla's 3rd largest individual shareholder, Ko Guan Leo, advised the company to buy back Tesla's shares with its free cash flow. Do you think that's a good idea? Maybe. Ko Guan believes that Tesla can buy back its undervalued stocks while investing in full self-driving, Optimus, and more gigafactories. He argued that the Fremont factory, Giga Shanghai, Giga Texas, and Giga Berlin were money printing machines. This is what he said. Fremont, Shanghai, Austin, and Berlin, money printing machines are running at full speed. Well, they're not right now, but I'm sure they will be soon. Tesla can invest in full self-driving, bot, and factories while buying back its undervalued stocks, shock and wake up a few brain-dead analysts to their senses. Tesla is a phoenix rising from the ashes. Now, last year, what happened? Well, most of Tesla's free cash flow came in the fourth quarter when Tesla reported generating $2.8 billion. In its Q1 2022 letter, Tesla stated generating $2.2 billion in the first quarter of this year. So Gary Black obviously agrees with Kogwan, the third largest investor in Tesla. He thinks Tesla should buy back their stock. In fact, he actually suggested that Tesla buy back $5 billion worth of stock from its free cash flow this year and $10 billion in 2023. Personally, I strongly disagree. I think Tesla can use that money wisely. I agree with Apple buying back their own stock because why? They don't know what to do with it. They've got money and they're like, should we build an EV? Yeah. Nah. Yeah, nah. Nah. Yeah. Maybe. Nah. Yeah. Well, let's think about that. Yeah, we'll hire some people. Nah. Apple don't know what they're doing. That's why I haven't invested in them. They don't know what they're doing. They're all over the place. Seriously. I love the company, by the way. I have an Apple iPhone. I've got an Apple laptop I'm using right now to film this video. But frankly, the company doesn't have a future planned. What's Apple's future about? Tell me. Yeah, it's not exciting. Just making iPhones and computers. And maybe an EV. Maybe. That's what I think is the reason that Tesla should not buy back its own stock. It can invest this money into doing incredible things. What incredible things? There's so many, I don't know where to start. I mean, the bot, first of all, would change the world in so many ways, right? That thing is a revenue generator far larger, in my view, than the automotive industry. Of course, full self-driving is extremely important. In my view, that's what is more important than these for the world itself is energy storage. Energy storage and solar. And if Tesla can focus more on that, we could rapidly change the world in incredible ways. Now, Kogwan said this, we Tesla bulls need more support. Tesla can invest in full self-driving, bot and factories while buying back its undervalued stocks. Shock and wake up a few brain-dead analysts. Martin Vicha confirmed that Kogwan Leo is the third largest individual Tesla shareholder after Elon Musk and Larry Ellison, the founder of Oracle. According to Bloomberg, Kogwan owns 6.31 million Tesla shares as of September of 2021. He has options to buy 1.82 million shares at a strike price way below current levels. This guy is rich and he's going to get a lot richer very soon. Personally, what do I think Tesla should be spending their money on that's not buying back shares? Well, first of all, resolving current supply chain problems as quickly as possible. I'm sure they're trying to do that, but maybe they could accelerate that. Accessing raw resources and minerals as much as possible. That's going to be a fight over the next decade. That is a fight they must win. Reducing their exposure to labor constraints. Ramping up as quickly as humanly possible, in particular in China. Of course, doubling production there, in my view, is the most important thing for Tesla's cash flow. Now, Tesla has solved big problems with first principles thinking and putting big dollars into long-term investment. That's what I think they should continue to do. Just stick with the basics. Problem solving, building as many batteries as they can, getting as much battery production as possible, and essentially just kind of kicking legacy auto up the butt. Because seriously, these guys still haven't got the picture. I mean, less than 5% of all electric cars sold by legacy auto this year have been EVs so far. And that, my friends, is just not good enough. Tesla needs to keep on kicking them around the room until they finally get the damn message. Thank you for watching, and I'll see you again on the next one. Bye-bye.